Welcome back from a weekend break over here. And today we start to see another mixed session in the global markets where markets now has digest this latest skirmish between US and Iran, where on late last Friday they have crossed this tick for tat, we call it tick for tat offensive, a minor one, due to an alleged Iran attack of a oil tanker that has sailed through the Strait of Hormuz. In today's Asia session at 11:03 a.m. Singapore time, as we are speaking, we start to see lackluster movement on the Nasdaq 100 E-mini futures as well as the S&P 500 E-mini futures, triggering a mixed performance on the Asia major stock indices, where we start to see negative performance on the Nikkei 225. However, the Hang Seng Index managed to trade higher as we are speaking, but the AI infrastructure slash semiconductor sensitive KOSPI index, which is from the South Korea, continues to trade in the red as we are speaking right now. And also, US dollar continues to remain firm in today's Asia session, triggering a negative feedback loop on gold XAU slash USD. And due to this fresh US Iran tension, potentially, we are now start to see a minor recovery in the West Texas oil. Very good morning and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Today will be a brand new trading week, Monday, the 29th of June 2026. So as usual, before we jump straight into the gist of the Daily Dose for today, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Make sure that. All right, good. So now let's kickstart what has taken shape over last Friday and as well as in today's early Asia session before we jump straight into a full suit of the intraday technical outlook on all those broad-based cross-asset classes that we cover on a frequent basis. So let's start with the news flow first. Let me share my screen over here. So basically what have happened over last Friday was this tick for that minor attacks between the two key stakeholders, which is US and Iran. So to try and it's already so pissed off with both sides to cement a permanent peace treaty between the obviously of today's Asia session. So apparently there's this news flow has agreed to hot attacking each other ahead of talks. All right, so basically are scheduled to schedule to call of understanding this week as standing down and vessels are able to move freely in the Strait of Hormuz. So there's some kind of a mini light at the end of the tunnel yesterday, uh, due to this mediators start to coming in to actually smooth the tension between US and Iran, and apparently both sides has agreed to hot attack for now. But what we see in the market so far is rather lackluster with this news flow because anything could change. So if you look at the E-mini futures on the S&P 500 and the E-mini futures on the Nasdaq 100 as shown on my screen, both are trading kind of sideways right now, 0.54%. And also the Nasdaq 100 is trading kind of sideways as well. The, uh, stock market a risk. we are seeing mixed performance in the Nikkei 225 down by 0.71%, and the Hang Seng Index a rebound up by 1.92%. Down the road, the line, the CSI A shares, which is the broader market of the China, almost unchanged at negative 0.1%. The 0.5% get the big 1.8%, and on the ASX 200 0.2%. Something wrong with the microphone or something like that. Test 1 2 3. Okay, let me check my microphone. Test 1 2 3. Right, let me just do a check. Testing 1 2 3. All right, so it's okay right now. My apologies if that is perhaps due to my rather sluggish internet connection over at my end. All right, so where we are. So basically the ASX 200, what we're seeing now is up by 0.2%, and Singapore TI most. So by both sides late last so might test to the my let me sorry 1 2 3. Testing. Uh, uh, let me still breaking up. My apologies. So let me do something about. It seems to me that there's something wrong with the voice or something like that. Let me do the check. Okay, let me try something. All right, let me try something. Okay, seems to be quite strange. Okay, let me try to do something over here. Test 1 2 3. Testing 1 2 3. Test 1 2 3. All right, so hopefully things are better now. Okay, so basically, what we are seeing right now is that the current performance of the E-mini futures on the S&P 500 and the Nasdaq 100, and as well as the Asia Pacific benchmark performance, is not showing a broad-based risk-on sentiment despite this positive news flow coming out from the latest US-Iran fluid relationship, where there was a report earlier this morning that both sides has kind of decided to stop these tit-for-tat measures as they kickstart this week of roadmap negotiation talks to actually cement this permanent peace deal between both of them. So with that in mind over here is that let us now take a look at the CME FedWatch 2. All right. So if you look at the latest CME FedWatch 2 over here on my screen, market participants are still looking for a hawkish vibe in the US Federal Reserve monetary policy stance. So if you look at the current CME FedWatch 2 pricing done by the Fed Funds futures traders in the Fed Funds futures market, the current rate of Fed Funds rate is at 3.5% to 3.75%. We are up. Market participants are looking at, which is the market participants in the Fed Funds futures market, they are looking for a high chance of 75% and almost 100% chance of 98% that the Fed will move the needle towards hiking rates, either in September or the October meeting this year, right, to bring it higher to 3.75% to 4%. And a coin toss of 50% chance, the second hike may come in the Q1 of next year, 52 and 51%, on the March meeting and April meeting of 2027. So what we could see over here is a hawkish Federal Reserve as being priced in by the Fed Funds futures traders, and that also allows the US dollar to trade in a firm tone as well. Right, so it continues to trade above the 100.54 key breakout resistance level that has taken shape on the 18th of June over here, despite the 2 days of pullback. Right, so it's more like a minor pullback, I would say, in the last two sessions on Thursday and Friday. But the overall medium-term uptrend of the US dollar continues to remain intact, supported by this continuation of this hawkish pricing by the CME FedWatch 2, or which is the US Fed Funds futures traders. So with a firmer US dollar having in play, that could actually potentially put a cap on risk-on activities in the major benchmark stock indices. All right, so that is the first segment of the daily dose. Now, let me now move on to the second segment, which I will cover all the intraday technical outlook on those broad-based cross asset classes. So, but before we do that, let me expand my screen first. Right, so let's start with the FX market. Okay, so the euro dollar hit 114.06, 114.30 before shaping that bearish reaction on last Friday. Right, so hence I'll be using this 114.06, 114.30 as my short-term pivotal resistance zone for today. 114.30. Okay, so still maintain a bearish bias view, but I will indicate a downside trigger level, which is at 113.60. 1360 over here, which is the minor swing low of last Friday Asia session, and that also confluenced with a minor ascending trend line drawn from the low of 24th of June. Okay, so breaking below 113.60 will increase the odds of this bearish bias view to test 113.20 on the downside, which is also confluencing with the bunch of Fibo extension level. Okay, and breaking below it exposes 1.1285, which is the 28/29 May 2025 congestion area. Only a bullish break up above 114.30 will invalidate today's bearish bias view to see a squeeze up back towards 114.80, 114.94, extension of this potential dead cat scenario unfolding towards 115.25, which confluence with the downward sloping 20-day moving average. So that's for the euro dollar. Next up will be the sterling pound, the sterling dollar. So sterling dollar continues to trade sideways as it continues to whipsaw around this long-term circular ascending channel support drawn from the low of 26th of September 2022 low over here. So what we could see is that it still managed to be kept below this former medium-term ascending trendline support broken down on the 18th of June that was being drawn from 4th of November 2025 low turns into a critical near-term pullback resistance zone at 132.62, 132.80. So hence I'll be still using 132.62, 132.80 as my short-term pivotal resistance zone, maintain a bearish bias view, and I will have a downside trigger level at 131.84, very similar to the euro dollar. So this 131.84 confluence with the minor ascending trend line support of 24th of June this year. Breaking below 131.84, then I will tighten the short-term pivotal resistance to 132.35, which was almost the close of last Friday US session high. And below it may expose 131.42, followed by 131.24 in the first step, which is the 20th/25th November 2025 congestion area. Only a bullish break up above 132.80 that would invalidate today's bearish bias view to see a squeeze up for an extension of this minor corrective rebound/dead cat bounce towards 133.25 that is confluencing 133.25, which is 1.3325, that is confluencing with the downward sloping 20-day moving average. Next up will be the Aussie dollar over here. So the Aussie dollar continues to trade in a lackluster fashion. All right. So what we could see is that it continues to trade in a lower high after the bearish reaction of exactly at 69.30 on last Thursday, and on Friday it almost test 69.30 as well, printed a intraday high of 0.6917 before trading lower. And in today's Asia session, it managed to retest the 68.84 minor range support level that has been in place since 24th of June over here, 68.84, right? 68.84. So still no change, still maintaining that bearish bias view. 69.30 breaking below 68.84 may expose the critical 200-day moving average, which is confluencing at this intermediate support zone of 68.63/68.43. Breaking below it will potentially reinforce this ongoing medium-term downtrend phase that has been in place since 13th of May 2026 high to expose the next intermediate support zone at 68.14, 68 figure level, which is a bunch of Fibo extension level on the downside. Only a bullish break up above 69.30 will invalidate the bearish bias view to see another round of minor corrective rebound sequence unfolding towards the next intermediate resistance level in first step at 69.60/69.85. Only a breakout above 69.85 will see a steeper minor corrective towards 70.20, which is confluencing with the downward 20-day moving average. All right, so that's for the Aussie dollar. Next up, we will have the dollar yen over here. All right, so the dollar yen continues to trade in a sideways range. So hence, previously we do have a bearish bias view for it to float down to 160.90, but this does not materialize and it starts to trade in the sideways range. So hence, for today, I'll be watching a neutrality stance instead, using the upper limit, which is a key resistance zone at that is confluence with the 3rd/10 July 2024 high that also previously led to a Japan authority intervention at that point in time, which was coming close to 2 years ago, where the MOF in Japan instructed the Bank of Japan to intervene directly in the FX market by selling the dollar and buy up the yen at that point in time. At that 161.95 level. So hence neutral between 161.95 and the lower limit of today's neutrality zone will be this level here, 161.38, 1.6138. So 1.6138 also confluence with the lower limit of this minor ascending channel drawn from the low of 12th of June. Right, so neutral between 161.95 and 161.38 for today. Only breaking below 161.38 may open up scope for a minor corrective pullback on an intraday basis to revisit 160.90, which is confluencing with the rising 20-day moving average. So that's for the dollar yen. All right, next up will be the intraday technical outlook on all the major stock indices, starting with the Asia Pacific ones first, which is the Hong Kong 33. So the Hong Kong 33 last Friday, we do have a bearish bias view. Bearish bias view almost hit, not it actually came down during the second half of the session at 22,670 before staging bounce back up. All right, in today's Asia session. So no, looking very closely the 23,270, that will be my short-term pivotal resistance level for it to have a potential inflection level for a bearish reaction to take shape. So as long as 23,270 is not surpassed to the upside, we still maintain a bearish bias view for it to float down with a range. Okay, today will be a range. So taking into account of this Asia session low at the start of today's Asia session, which is 22,007. So let me slash it. 757. Okay, so still maintaining the bearish bias view for a potential bearish reaction below 23,270 short-term pivotal resistance. First support level 22,757, 22,670 for today. Only breaking below 22,670 may expose further weakness towards 22,144, which is a Fibo extension cluster level on the downside. And if you go back in time, 22,144 is the former minor swing high of 25th of April and 29th April 2025 turns into a pullback support level. Only a bullish break up above 23,270 will invalidate the bearish reaction move and see a further squeeze up towards the next intermediate resistance zone at 23,810, 23,970. Next will be the Japan 225 that is getting rather vulnerable. So last Friday, we do have a bearish bias view on the Japan 225, which is representing the Nikkei 225. So indeed, it tested the first support zone before doing some stabilization in today's Asia session as we're speaking right now, 11:25 a.m. Singapore time. So that zone will be 68,735, 68,089. But however, the price action on the hourly RSI continues to remain lackluster. As you could see, it has kind of broken down below this parallel ascending trendline support and indicating that there is still some form of bearish momentum still inherent in the short term for the Japan 225 that's representing the Nikkei 225. But given that it hasn't broken down clearly below 68,089, which is confluencing with the 20-day moving average, I do not want to tighten the pivotal resistance to be at 70,700. So I'll still maintain the same resistance at 71,735. Short-term pivotal resistance unless we see a clear bearish break below 68,089, that I will tighten it to 70,700. Next support level to watch will be 65,880 for today. All right, which is confluencing very closely with the 50-day moving average as well. Only a bullish break up suddenly above 71,735 that would invalidate the bearish bias view and see a squeeze up to retest the former all-time high area or the current all-time high area that was printed on the 22nd of June this year at 73,577, 74,025. All right, so that's for the Japan 225. 160, like a range, and it float down, tested the range support, which is the 50-day moving average at 24,800, 24,660 before bouncing up in today's Asia session. So with that, still continues to maintain a bearish bias view within this range. So any bounce up will be an opportunity for me to fade the strength below 25,160 short-term pivotal resistance level. First support level to watch will be the range bottom or the range support level that is also confluencing with the 50-day moving average at 24,800, 24,660. Only a sudden bearish breakdown below 24,660 and hourly close below it, then I will tighten the pivotal resistance from 25,160 all the way down to 24,910. The next support level to look out for below 24,660 will be 24,465. Then thereafter followed by this 200-day moving average that is confluencing at 24,300. All right. Only a bullish breakout above 25,160. Pardon me, only a bullish break up above 25,160 that would invalidate the bearish buyers will be in the range and see a squeeze up to revisit the current all-time high area that has managed to get rejection on the 25th of May. And the current all-time high area is this area here, 13th of June this year at 13th of January this year at 25,410, 25,489. All right, so that's for the Germany. Next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30, which is represented Dow Jones Industrial Average, going to trade sideways below the short-term pivotal resistance at 52,635. So no change. Going to look out for 52,635, maintaining that bearish buyer's view with the first support at 51,690 that almost tested on last Friday opening US session, where it printed an intraday low at 51,744. Hence, breaking below 51,690 may expose the next intermediate resistance, may expose the next intermediate support zone, pardon me, that is confluencing with the 20-day moving average at 51,390, 51,235. Only a sudden bullish reversal and a break up above 52,635. All bets are off for this bearish buyer's view to see the continuation of the bullish impulsive upmove sequence to open up scope for the next intermediate resistance to come in 53,030, 53,045, followed by 53,485, 53,557, which is a bunch of Fibo extension cluster level on the upside. Next up will be the SPX. So the SPX also continues to trade within our set expectation. On last Friday, we do have a bearish bias. Bearish bias hit the first support and managed to bounce. So no change in terms of the levels to watch. So still continue to keep a close eyes watch on 7,410. So that will be my short-term pivotal resistance level for today. Maintain a mild bearish bias view, which is almost at the 50-day moving average, for it to revisit last Friday low at 7,333. Only breaking below 7,333 will increase the possibility of further potential bearish leg to revisit the 11th of June, 9th of June, and as well as the 12th of June swing low area at 7,272 slash 7,243. However, a bullish break up above 7,410 will revisit the rejection level of 24th of June and 25th of June at 7,442, which is coming close to the 20-day moving average. Above it, we'll see a further squeeze up towards 7,485. So that's for the SPX 500. Next will be the Nasdaq 100. So Nasdaq 100 also continues to be trapped below the 20-day moving average, but can't break below the 50-day moving average. So it's something like a zone now. Over here, 29,047. Okay, let me put it in writing. 29,000 slash. Okay, so neutral between and pardon me. So basically, let me. Okay, I think there is something wrong with the screen again. Okay, hopefully the screen is not frozen. Okay, so using 29,000 as the short-term pivotal resistance that we have on last Friday, maintain a mild bearish bias view for it to float down back towards the minor range support that has been formed since the low of last Thursday, which is converging with the 50-day moving average. That is the intermediate near-term support zone of 29,046, 28,900. Only breaking below 28,900 will expose further weakness, excuse me, to retest the swing low of 10th of June and 11th of June at 28,280. Only a bullish break up above 29,666 that would negate today's bearish bias view to see a squeeze up to revisit 30,010, 30,100, which is the congestion area of 29th of June and the 25th of June. Right, so that's for the Nasdaq 100, still maintaining a mild bearish bias outlook using 29,066 as the short-term pivotal resistance level, downside trigger level moving average that is also close to the range bottom of last Thursday, a minor one at 29,047, 28,900. Right, so now let us now proceed with the commodities market, starting with the gold XAU/USD. So gold got rejected on last Friday, right exactly at our adjusted pivotal resistance that we have since late last week, 4,089. So no change, still using 4,089 as my short-term pivotal resistance level, except for today, I have a, give me a minute, except for today, I have a downside trigger level, which is at 4,002, which is very close to the psychological at 4,000. Okay, so 4,002 also confluence with the minor ascending trend line drawn from the low of 25th of June, which was last Wednesday, or last Thursday, pardon me, Asia, 12 a.m. Asia session. So breaking below 4,002 will expose another potential minor down leg to see the next intermediate support coming in at 3,934, 3886, which is the 5th of November, and the 20th of October 2025 minor low, and the medium-term swing low of 20th of October, which is 3886. Only a bullish break up above 4089 that would invalidate the bearish buyer's view to see a further extension of this minor corrective rebound, dead cat bounce towards 4140, followed by 4220, 4243. That is confluencing with the 20-day moving average. So still maintaining a bearish buyer's view on gold XAU/USD for today, using 4089 short-term pivotal resistance with a downside trigger level at 4012. Lastly will be the West Texas crude oil over here. So what's interesting on the West Texas crude oil, last Friday, we do have a bearish bias. So bearish bias can't break below 70.25 and starts to stabilize. And what's interesting during this stabilization, we start to see a very clear bullish divergence on the hourly RSI. So the hourly RSI clearly showing a higher low over here. So indicating that downside momentum may have started to ease off. So hence, I'll be using this critical support zone 67.40, 66.10 as my short-term pivotal support zone for today, which is also defined by the 2nd of March 2026 gap up during the onset of the US-Iran conflict, and also the former descending resistance from 28th of September 2023 high in dotted green now turns into a critical pullback support level as well. So using 67.40, 66.10 short-term pivotal support, flipping to a intraday bullish bias view for a potential corrective rebound sequence to unfold again, with the first resistance level to watch 73.22 over here, which was the minor swing high of last Friday, 2 a.m. Singapore time hour. So this is 73.22. Followed by 75.25, which is confluencing with the 200-day moving average. Only a bullish break up above 75.25 that will potentially see a steeper bullish reversal, heading potential next towards 77.39, followed by 79.23, over here. All right, so that's for West Texas oil. However, if we start to see a bearish breakdown below 66.10, then this minor corrective rebound slash bullish reversal thereafter potentially breaking 70.25 will be invalidated to see the continuation of this bearish impulsive downward sequence unfolding, exposing 63.80 followed by 61.50 next. Right, so that's for West Texas oil. Watching closely 67.4, 66.10 short-term pivotal support level for a potential minor recovery. So with that, let's sum up all the intraday technical outlook on all these broad-based cross-asset classes. So before we go, let's have a quick look at the economic calendar. What are the key events / data to look out for today? So today will be a rather quiet session, not much of economic data to chew on, except that we have a Bank of England official speaking. So there's one Bank of England official Phil speaking at 1 p.m. Singapore time. So that could potentially influence the sterling dollar and the sterling crosses. And as we head into the US session, it will be pretty much quiet over here. All right. And at this today, I think there's some ECB forum on central banking. So hence various ECB official will be speaking. So at 1:30 a.m. Singapore time, we have ECB official, which is Tuesday, 30th of June. It's ECB President Lagarde speech. So that could potentially influence the euro dollar and the euro crosses. All right. So with that, let's sum up today's daily dose of market insight, and also do keep a lookout for the headline coming out from this US-Iran ongoing 60-day of roadmap negotiation for a permanent peace deal, and also be on the lookout for any particular news flow that we may see a continuation of this tit for tat offensive between US and Iran over last week alleged Iran attack on a oil tanker that sailed past the Strait of Hormuz. All right. We speak again tomorrow. Thank you.